Hey, good morning, everyone, and welcome back to our weekly live webinar. So we have Lafayette on today, and we're super excited to talk about some of their products. We have Mr. Brandon on with us today, so of course he's going to go through this information. Any questions you guys have, put them in the chat box. Of course, we're live on Facebook as well, so if you have any questions over there, let us know. As always, super excited to dive into it. So again, we'll bring Brandon right in, and you guys, if you have any questions, let us know. Thank you. Take
Hey,
it away,
thank.
Brandon. I'm sorry.
Oh no, you're good. Thanks, Brent. I appreciate it. Thanks for letting me be with you all today. I just wanted to kind of go through a couple of things here today. But first and foremost, my name is Brandon Hamilton. I'm the director of the sales desk, product marketing, and training here at Lafayette Life. And today I want to go over one of our newest products here with you, and that is the Lafayette Life Patriot Now, which is a rapid issue whole life plan. And we'll get into exactly what rapid issue means and how that could impact your business here for 2025. So let's go ahead and hop in to a little bit of an agenda. So we're going to talk about what is Patriot Now. We're going to get into the product specs, when to use it. We'll get into some case studies. I'll show you how to illustrate it and show you how easy it is. And then, like Brent mentioned there, if you do have any questions, feel free to type those into the chat. I'll address those there at the end. Okay. So let's talk first about what is Patriot Now. So obviously there's a market challenge when it comes to life insurance. We all know that. The pace of business is getting quicker and quicker, and companies responded to COVID by investing in digital technologies. Traditional underwriting is effective at segmenting mortality risk, but the market demands speed. Younger clients are much less likely to tolerate a 2 to 4 week turnaround, especially for underwriting. So that's where Patriot Now comes in. So that's kind of our solution here. So I'm going to let these crazy animations go here. But just know that millennials and Gen Z represent a big market opportunity, especially in the life insurance space. Over 46% acknowledge that need for life insurance, and these clients appreciate a far faster, more convenient buying experience. They probably don't want a paramed showing up to their home or work. Meeting with them in person is going to be difficult. They may prefer to meet at home or anything like that. So that's why we introduced Patriot Now's Rapid Issue Whole Life Plan. We think of it as a next generation solution that brings together products and process. So some of the features of Patriot Now is it's the same structure as our retail portfolio of current products. So it's the same underlying Patriot 2022, but we've made it in a Patriot Now format. It's a fully digital process. So illustration to e-app to e-delivery, 100% digital on that aspect. So everything will happen on a digital footprint there. There's going to be no paramed exam. So clients will complete the health questionnaire. You don't have to complete it with them. I mean, you can, but you don't have to. And then normally these are going to be issued in 3 to 5 days for eligible cases. And we'll talk about eligible cases here in a little bit. Just note there is an asterisk down there that says non-eligible cases will be considered with full underwriting. So your underwriter will reach out to you if you have somebody that might be a good risk, but just doesn't qualify for this plan. So you'll be notified, obviously, of those necessary requirements. So what is the Patriot Now accelerated process? Okay. So first we've got N. I forgot that this was an acronym here. N stands for no exam or phone interview. O is that it offers one of 4 rate classes, and W is with a decision in 3 to 5 days. So the benefits to you obviously is it's processed faster, which means for you all, you will get paid quicker. Yep. So pretty good benefits all around here. So let's get into the specifications. So the Patriot Now specifications will be issue ages here, and it's going to be based on the total underwritten amount. I'll show you when we get into the illustration system where the underwritten amount is located, but just remember that total underwritten amount includes your base face amount, any term riders, and any paid up additions riders that you may have on there. So for ages 18 to 50, we can go up to $1 million of total underwritten amount. For ages 51 to 60, we can go up to $250,000 of insurance there. And right now, when we look back at all of our current book of business, 70% of our Patriot policies at these ages eligible today would qualify for rapid issue plans. And that includes PUAs and term riders. Okay? So the rate classes that are offered, now obviously with this becoming a rapid issue product, we do have to give up a little bit here. So it will be moving from a preferred rate class. You don't have the opportunity to make preferred on Patriot Now, but you do have a no tobacco plus, no tobacco, tobacco plus, and a tobacco rate class. So some important distinctions between Patriot Now and Patriot 22 as to why you would use one over the other. The same guaranteed cash value and death benefit will be made available on both Patriot Now and Patriot 22. So if you put them side by side, you're going to look at the same guarantees. The non-guaranteed values will retain about 98% of the Patriot 22 value. Obviously, the Patriot 22 is a fully underwritten plan, so they may qualify for preferred. So 98% is a pretty good number there. And then additionally, the PUA rider loads will be 1% higher on Patriot 22, will be higher than Patriot 22 PUA riders. So the Patriot 22, the current PUA load for any money going into the PUA rider is going to be 6%. For the Patriot Now, we just move that to 7%. So you're not giving up a whole lot to get this issued a lot quicker. And then finally, Patriot Now term rates differ a little bit from Patriot 22 rates just because we know there's going to be probably a little bit more excess mortality that's already built into the plan there. So when do you use Patriot Now versus Patriot 22? So Patriot Now is going to be built for speed and ease. So it's going to offer fast underwriting with no paramedical exam. It's going to be an easy application process, and quick commissions are going to be paid. Okay. Patriot 22 will be good for larger cases that push over that $1 million total underwriting amount. If your client is really, held up on the option to do preferred underwriting classes, that'll be an option where you probably want to go Patriot 22. And then if you want more more rider options, like maybe our option to purchase additional insurance, maybe that's going to be an option for you. You might want to use Patriot 22. But Patriot Now is going to be built for probably about, like I said, 80 to 90% of our cases that come through. So who's a good candidate? Clients are a good fit for Patriot Now rapid issue underwriting if these facts apply. Okay. Obviously, they've got to be between 18 and 60. They have to be applying for a face amount between $25,000 and $1 million. And that says face amount. It should say total underwriting amount. They have to be within the recommended weight limits. They have to be gainfully employed and have not filed bankruptcy in the last 5 years. They have to have a clean motor vehicle report, and they have not received a felony criminal conviction in the last 10 years, and obviously no pending criminal charges and no not on probation or parole, and that has not used illegal drugs within the past 10 years. Okay, that is going to be who's going to be a good candidate for that. So that's going to be some obvious things that we have to go through in the full underwriting process anyways here, but just note that we just wanted to at least pull those out just to let you know who'd be a good candidate for Patriot Now. There are some common disqualifying conditions for underwriting here. So just note that the common disqualifying conditions are over on the left. Those are all listed there. And then over on the right-hand side, you've got common conditions requiring full underwriting. So if your client does have any of these, while they may not be a fit for Patriot Now, we could probably push them through, something like a full underwriting process there. And like I mentioned earlier before, your underwriter will reach out for that. Okay. So once again, top 10 reasons for using the full underwriting plan. The Patriot 22 would be the financial history, undisclosed history that might not come up in the interview, height and weight outside the acceptable limit, diabetes or insulin diagnosed over the age of or less than the age of 50, driving history, medication history, cardiac history, multiple impairments, mental health diagnosis treated with multiple prescriptions, and then chronic use of narcotic pain medication. Those are going to be some of the reasons you might want to go to full underwriting rather than Patriot Now. So I've been talking a little bit about the difference between Patriot 22 versus Patriot Now. So let's get into a case study here. Let's talk about Blake. Blake's a 45-year-old male who's in great health. He needs insurance, but is tough to nail down for a paramed. And he also has acute trypanophobia, which is a fear of needles. So sending a paramed to his house to get a blood sample is probably going to be a little tough. He wants to spend $12,000 a year, and we want to allocate that a little bit differently here. We want to have 40% of that $12,000 number going towards the base coverage, and then we want to put 60% of the premium allocated to the LPUA, the level premium paid up additions rider, and the term rider. That term rider, once again, is going to offset any modified endowment contract risk, so you'll just want to have that allocated appropriately. So if we look at the cash value differences and the death benefit differences, here's where we're going to look at Patriot Now versus Patriot 22. So in those early years, you're going to be looking at a cash value in year one of 75.53 for the Patriot Now, and Patriot 22 of 77.31. So that's only a difference of 97.7%. So you're retaining about almost 98% of your values, and you've been able to get this policy issued down from, let's just say 6 to 12 weeks down to 3 to 5 days. So you were able to get that out of there a lot quicker, and the value retention is pretty dang strong. If you look at year 10, you're over that 98%, just barely at 98.02%. Year 20, you've retained almost, once again, 98% of that. And then finally, even at year 30, we're looking at 98% roughly there on value retention on the cash value. When you look at the death benefit story, it's even higher there. So on the Patriot Now versus Patriot 22, you're looking at 99% of value retention on the death benefit. And that even goes all the way through year 30, where we are looking at, a 98.15% value retention from Patriot Now to Patriot 22. So once again, we've been able to get this policy issued as quick as possible in 3 to 5 days, and brought that down from 6 to 12 weeks. And the client isn't losing out on a whole lot, and they've got a policy that's in place. So if we take a look at the non-guaranteed values, and this is just an exercise that we ran at a 35-year-old male, a 45-year-old male, and a 55-year-old male. So once again, this is going to be the non-guaranteed values. Up at the top is going to be your cash value. Down below is going to be your death benefit. So it's going to be the same story. So 35-year-old male, obviously retention is going to be a little bit higher, not as high of mortality risk that goes in there. But even as you move through some of these mortality years here on value retention, you're still seeing really strong numbers, almost 97% across the board. You're closing in on that. On death benefit, obviously, you're almost at a full 100% here on a 35-year-old male. That's the same across a 45 and 55. And then even as we get down here, lowest we drop is a 96.8% for death benefit on a 55-year-old male 30 years out. So that's at age 85. So, pretty close to those mortality years. You're looking at a 96.8% value retention. So a good, strong performance from a product that's able to get out and issued as quick as possible. So now my fun portion that we get to bring over is how to illustrate this product. So let me go ahead and bring up our illustration system. So in our system here, you'll come to the illustrations and applications page, and you'll see Life and SPIA illustration system. So I'm going to select that, and that's going to launch us directly into our iPipeline system. So I'm going to hit Start New Case, and I'm just going to type in a couple of pieces of information. First, I'll spell valued right, valued client, and let's just do a 40-year-old female here, okay? I'm going to select the great state of Arkansas in honor of Sarah and Brent there at Eldercare, and I'm going to hit I'm going to go down to product type. I'm going to look for rapid issue whole life right here. So always make sure you're selecting this rapid issue whole life and hit find available products. That'll bring up Patriot Now right here. Okay. So I'll select illustrations, and this will launch me into our platform here. So this is going to be a little bit different than our normal illustration system. I'll just point out a couple of differences here. First, we're going to have this big blue box pretty much everywhere, just reminding you that the Patriot Now total underwritten amount can't exceed $1 million for 18 to 50 and $250,000 for 51 to 60. Also know that if you do exceed any of those, you're going to get a warning box. It'll tell you, hey, this is going to be above that total underwriting amount, so you might want to switch over to Patriot 22. All you have to do for that is just come down here to whole life and then select Patriot 22, and you can swap over to that. It'll carry over all your information. Let's just go through the Patriot Now section though here. Your rate classes will be distinguished here. So no tobacco plus, no tobacco, tobacco plus, and tobacco rates. I'm going to leave it right here at no tobacco plus. Okay. From here, you can go down to solves, and let's just say we wanted to do something similar. Let's just say our 40-year-old female wanted to do $2,000 a month into a whole life plan. So I'm going to hit $24,000. And I'm going to do same kind of split here. Let's do 40% to the base, 60% to the LPUA, and then avoid MEC options. Now, since this client is 40, I'm just going to try to fund this as long as possible. So I'll add a 30-year term rider, and just know that that'll help offset MEC for a 30-year period. So if that's all I really want to do, That's all I've got to do. I can hit view illustration here, and this will bring up our ledger here. Okay, so I know that this number will probably be less than that $1 million worth of coverage, so we'll get something that generates here. So the ledger is going to look exactly the same as our Patriot 22 portion, Patriot 22 ledgers, but now we've got $24,000 going in for a 30-year period. Then after that, the system solved for as much paid up additions and base until we get out here to age 75. So we've got a pretty good policy here. So we're putting 24,000 bucks in. We've got a net cash value. Let's make this a little bit bigger. There we go. So that way even I can see it. We've got a net cash value of $15,711 in the first year, and an overall death benefit of base, term, and any paid up additions of $440. So you can see that that $1 million of total underwriting coverage is going to be pretty generous on a lot of these policies here. So all things considered, we've got a 30-year term to offset MEC. We've got an initial face amount of $206,000, and we're still well short of that $1 million of coverage. Okay. So even after a 10-year period, we've put in 240, you're looking at a gain of 11,986. And that's just going to continue to grow as you go on down the page. Another thing we always like to point out too is when does your net cash value increase by more than your premium? This is really strong here too because it only takes 5 years before the client is putting in 24,000 bucks, and their increase in net cash value is actually more than what they're putting into it. So they've put in 24,000, their net cash value increases 24,446 bucks, and then the story is even stronger as you go on down the page. So we talked a little bit too about where to find that total underwriting amount. So if you come down here to the additional information page, you'll see that you'll have your premium information, and then you'll come down here to your underwriting requirements. So the primary insured underwriting requirements for this particular policy, which is a female age 40, no tobacco plus, of $24,000 a year, based on the way that this policy was designed, we're only at half the capacity roughly of what the underwriting amount could take for a Patriot now. So you could theoretically take almost up to $48,000 a year into a plan and be able to utilize the speed and efficiency of Patriot now. We took a look around a couple of other things too on the illustration. The plus rate classes with Patriot now do also qualify for our accelerated death benefit plus rider. So if it's tobacco plus or no tobacco plus, they will get the ADBR plus, which covers our chronic illness coverage, specified medical coverage, and our terminal illness coverage. If it's either standard or tobacco rates, that will get the ADBR rider, which is just terminal illness coverage. So that's one of the differentiations I just want to make as to why one would be including the ADBR plus and one would just be the terminal illness coverage. So just remember that everything that's listed here is going to be what's available to your client in a given year if they were to be hit by a chronic illness, specified medical condition, or chronic illness or terminal illness. So hypothetically speaking, if this client got out to age 55 and got hit with a terminal illness, they could advance up to $673,000 of their death benefit and still leave $203,000 behind to their beneficiary. Okay, so that's just how that report reads right there. If I look around the rest of the illustration system, premium is really going to be where we can kind of design, whether it's monthly, if we have a base premium we want to use here, anything like that. You can get into some more complex designs like reduce paid up, all that good stuff on this page. And then finally, you've got your rider section here. So just note that the only riders that'll be made available on Patriot now are the ones that are actually available to be sold. So you've got your level of premium paid up additions rider, which is our more flexible rider. We've got our fixed premium paid up additions rider, which is a little bit more rigid and better for longer term growth. We've got our single premium paid up additions rider, which just takes in large 1035s or money outstanding sitting on the sidelines. It's just going to be a one-time dump in. And then we'll have our term riders. As far as other riders that are available here, these would be some of our other riders. So we've got the ADBR rider and the ADBR plus. You can add an accidental death benefit rider to this if you like. And then our premium deposit fund rider that comes standard on all policies. Additionally, you can also add our waiver of premium. One quick commercial for our waiver of premium rider. We are a true own occupation definition for the life of the rider. And so what that means is if you have a client that is, let's just say, a dentist and they injure their hands and they can't operate their practice, but they can teach at dental school or anything like that, they are deemed by own occupation, they are deemed unable to perform their duties. So we would deem them disabled and we would waive the base premium and the term rider on that side. So any occupation would require them to be totally disabled in order for them to qualify. Okay. You have a couple of other options out here as well too, but the main one you want to have is probably loans and withdrawals. This will be another key feature out here if you wanted to model out any loans or withdrawals coming from the policy. Just know that we can do that. The only limitation is we just can't illustrate any loans or withdrawals in the first year. That will be made available in year 2. You can do it in practice, just in theory, we can't actually show it in the illustration. All right, so hopping back into our into our process here, what's the application process for Patriot now? So once again, it's e-application only, so there's no paper app for Patriot now. The medical questionnaire can either be filled out in person or later at the client's discretion. So if you are with the client and they want to fill it out with you, that's great. And if they want to fill it out just to maintain some privacy or, they just have to run to another meeting, just know that the application will allow you to send the medical questionnaire to the client at their discretion. So it'll give them a couple of reminders and it'll keep you in the loop of exactly when everything is going on. And then finally, once again, it is e-delivery only. Okay. So if you do go the Patriot Now route and you wanted a paper copy, just know that they're going to get a file that they can actually print out, keep, but they will also have a e-delivery only. So as far as underwriting goes, there's going to be one of 3 outcomes that are going to be communicated. So when they apply, the most likely option here is going to be the approval, which would just give the Patriot Now product. The second outcome could be that additional information is needed to underwrite the risk, which may include just a simple clarifying question or the need for traditional underwriting. So it might just be something from the underwriter that just has a question about a medication, a test result that's in the file, or something that's popped up on MIB. So just keep an eye out for some of those underwriting questions. And then finally, the other third outcome is going to be a decision not to accept coverage. So what happens if your client doesn't qualify for Patriot Now? Lafayette Life will close the application, and if they wanted to go the Patriot 22 route, you just need to reapply by submitting a new application on Form 1459 or our e-application to receive a full underwriting plan. Okay, I'll close this out here before my email goes crazy. So just know that we also do have some marketing materials as well too. So we've got a whole suite of marketing materials out there. So the same Patriot Now versus Patriot 22 you've got some client-facing pieces, some guides, some spec sheets, and then you also have Ready for Rapid here, which kind of outlines some of that, and then Patriot Now issue guide as well too. One of the other things we have out there is going to be a really cool piece where it's almost like an intake form, and you can just kind of walk through with your client, hey, do you have any of these options, or do you have any of these disqualifying conditions or medications that are out here? You can actually list those out there and see if they're going to be a good risk on that side. And so with all of that, we're going to open some time up for some questions here, but just know if you do have any additional questions that don't come up either today, or if you sit and think about it, you can always contact our sales desk. They can be reached at 866-937-5542.
Good deal. So I do have a question.
Yeah.
So I have one here that says, so the product is 40% whole life and 60% term.
No. Nope. It is 40% whole life, 60% term, and paid up additions rider.
Okay. And then I have another question here. It says, so you're asking the client how much they're going to pay for the premium. Do they get face amount, or are people saying $2,000 a month for life insurance? So I think I was looking at the illustration, I believe it was.
Yeah, gotcha. So that is just an example there. Obviously, your client will decide how much they're going to spend. You and your client will decide how much you're going to spend on the premium, based on coverage amounts and everything like that. So you can kind of divvy that premium number up. Additionally, when we talked about that 40%, 60% split earlier, That's a number that you kind of design with the client in mind. So if you wanted more cash value, you'll go more towards paid up additions. If you wanted more death benefit, you're going to look more towards the base policy.
Okay. Sounds good. Well, that is all I have on this end as far as questions. I definitely appreciate you going through everything. I know those are some of the top things that we look at when we talk about products, or agents are asking us when we talk about products, what the process looks like to the applicant, or how to process an application, what options they have, things like that. So we'll definitely put this information out there, of course, for everyone that's on here right now. We will definitely make sure we give you guys a call and go from there. So, Brandon, I do appreciate it. And thank you for attending or presenting. And thank you all for attending. And you guys have a good day.
Hey, you all too. Thank you. Have a good day.
Yes, sir.